Something has quietly changed, without a single news alert, without a politician giving a speech about it, and without a word of warning to ordinary Australians. The rules around the $10,000 bank reporting law have been tightening year after year, and almost nobody over the age of 60 has been told any of it. This is not a warning about something that is coming. It is a warning about something that has already happened. It is happening right now, this week, in bank branches and banking apps across the country. And if you try to move your own money the way you did 20 years ago, you can get flagged, delayed, reported, and in some cases, have your account frozen, even though you have done absolutely nothing wrong. My name is Marcus Pierce, and I am going to walk you through exactly what has changed, who it catches, and the protection moves you can put in place this week. Because the $10,000 rule that most Australians half remember is not the rule that exists today. To understand why this is hitting retirees so hard right now, you have to start with one number that has not changed. The $10,000 cash reporting threshold was written into Australian law decades ago when our anti-money laundering rules were built. Think about what $10,000 meant back then. It was a serious chunk of a house. It was close to a year's wages for a lot of people. $10,000 in cash was a genuinely unusual amount to be moving around. That threshold has never been lifted for inflation, not once. But the world around it has changed completely. Today, $10,000 is a second-hand car. It is a kitchen renovation. It is a dental implant or a new set of hearing aids. It is a deposit gift for a grandchild. It is a lump sum from a late husband or wife's super. All of these now routinely cross that line many times a year for a perfectly ordinary retiree. So here is the reality. When that rule was written, the $10,000 threshold was aimed at organized crime. Today, that exact same frozen number sweeps up your grandmother buying a car. That is the baseline. Now let me show you the 4 specific ways the system around that number has tightened. Change 1. Your bank can now slow down your own withdrawal. This is the one almost no retiree knows about, and it is the one most likely to catch you off guard at the worst possible moment. In response to a real and rising problem, scams against older Australians, the banks have signed up to something called the Scam Safe Accord, and they have sharpened their internal systems for spotting what they call financial abuse. On its face, this is a good thing. Australians lost billions of dollars to scams in a single recent year, and older people are targeted relentlessly by romance scams, grandparent scams, and fake investment schemes. But here is how it actually plays out at the counter or in the app. Your bank's software is watching for any transaction that does not fit your normal pattern. If you have spent 10 years taking out a few $100s at a time, and one morning you ask for $10,000 in cash, or you try to transfer it to an account you have never paid before, the system does not know you're buying a car. It does not know anything about your life. It sees something unusual, and it can flag it for review. That review can mean questions you were not expecting. What is the money for? Did someone ask you to make this payment? Have you met anyone new online? Those questions are not an insult. The staff are trained to ask them because sometimes they catch a real scam in progress and save someone's life savings. But for a sharp, capable retiree who simply wants their own money, it can feel like an interrogation. And the bank can place a temporary hold on the transaction while it satisfies itself that everything is legitimate. Now, I want to be precise and honest with you here because I have seen overseas videos badly exaggerate this. There is no single law in Australia that says your bank must freeze an older person's money for a fixed number of days. What there is a system that increasingly allows and encourages banks to pause and review unusual transactions and to add more warnings, more delays, and more friction, especially on a payment to someone new. And the incentive only runs one way. A bank that delays your payment and turns out to be wrong pays no real price. A bank that lets money fly out to an actual scammer faces a furious customer and bad headlines. So, when in doubt, the bank leans towards pausing first. That is the change. It is quieter than the scare video version, but it is real. Change 2. Breaking up your money is a crime. This one is the most dangerous because it carries actual criminal consequences. Here is the rule. Anytime a bank handles $10,000 or more in cash for you, it files a threshold transaction report to AUSTRAC, Australia's financial intelligence agency. That report is automatic and it is harmless. But if you deliberately break your money into smaller amounts to dodge that report, that is called structuring. And in Australia, it is a criminal offence under the anti-money-laundering law, carrying the possibility of prison time and serious fines. And listen carefully, the money does not have to be dirty. It can be 100% clean. the proceeds of a house sale, an inheritance, an insurance payout, your own super. It does not matter. If you intentionally break it up to avoid the $10,000 report, you have potentially committed a federal offense. For years, the obvious version of this was someone walking in day after day, depositing $9,500. Everyone understood that pattern, but the monitoring software the banks use has become far more sophisticated. It is not just looking for amounts sitting right under $10,000 anymore. It is looking at the shape of your activity. Deposits of $7,000, $8,000, $8,500, spaced in a way that looks like you are managing around the threshold. That does not mean you will be charged, but it can mean you get flagged. And a flag can trigger a second, far more serious report, which I will explain in a moment. The cruel irony is this: the people most likely to get tangled up are not the criminals. The criminals know the rules cold. It is the honest retiree who heard a tip from a neighbor and tried to be clever about a deposit. So please, never break a deposit into pieces to stay under the line. That single instinct is the one thing that creates the problem. Change 3. The report you will never know about. Alongside that cash report, there is a second kind called a suspicious matter report. And this one has no minimum dollar amount at all. There is no floor. A bank can file one on a small transaction if the behavior looks like someone is trying to avoid detection or simply looks out of character. And here is what makes it dangerous for you specifically. You will never know one has been filed. It is against the law, a criminal offense called tipping off, for a bank employee to tell you that a suspicious report has gone in. They are required to do it silently, so you could be flagged today and have no idea. And that report sits in a federal database cross-referenced against your future transactions for years. The threshold cash report is routine. The suspicious report is targeted. And the difference between triggering the harmless one and the dangerous one usually comes down to a single decision, whether you moved your money cleanly and out in the open, or whether you tried to be clever about it. Change 4. The net now stretches well beyond cash. The reporting system no longer stops at cash in a branch. Two things have widened the net. First, international transfers. When money moves into or out of Australia electronically, that gets reported to Austrac. And here is the part that surprises people. In Australia, an international transfer is reported regardless of the amount. There is no $10,000 floor on international transfers the way there is on cash. A transfer to family overseas, or money coming in from abroad, lands in the system, and Austrac shares that information with the tax office. Second, cryptocurrency. Australia has brought crypto firmly into the Austrac system. Digital currency exchanges have to report large transactions, over $10,000, and anything suspicious, the same way a suitcase of cash would be reported. The clean line that used to exist between ordinary banking and digital money is essentially gone. Now, I want to be straight with you about what is not true here, because there is a lot of overseas misinformation floating around. You may have seen frightening videos claiming that every small payment, every $600 transfer to your grandkids is about to be reported. That is an American rule. It does not apply here. Your everyday pay ID or OSCO transfer to your grandson for his birthday is not being reported to the tax office because it is $600. For everyday domestic cash, the number that still matters is $10,000. Do not let an overseas headline frighten you into doing something foolish with small ordinary transfers. So that is what has changed. Now here is what to do about it, because the point of this video is not to scare you, it is to make sure your money moves the way you want it to. Move 1. Give your bank a heads up before a big transaction. This is the single most powerful thing you can do, and it is free. Before any large withdrawal, deposit, or transfer, call your branch ahead of time or speak to the manager and tell them what it is for. I am buying a car next week, and I will need to withdraw the funds. When the transaction hits their system, the explanation is already sitting there. The report over $10,000 still gets filed automatically, but your money actually moves when you need it to, instead of being held for review. Move 2. Never, ever break up a transaction. If you need to move $12,000, move it as one $12,000 transaction. Do not split it into two sixes to stay under the line. One clean move triggers a routine report you will never even feel. Two careful little ones are the exact pattern the software is built to catch. Move 3. Name a trusted contact. This is a quiet, powerful tool most Australians have never heard of. Many banks now let you give them the name of a trusted person, an adult child, or a close friend whom they are allowed to phone if they are ever worried about a transaction or about your well-being. Crucially, this person cannot touch your money or make decisions for you. They are simply a phone call the bank can make to confirm you are okay, instead of freezing things and leaving you stuck. Having one in place can be the difference between a same-day release and a multi-day headache. Move 4. Keep a simple paper trail. For any transaction over a few $1,000s, jot down the date, the amount, where the money came from, and what it was for. A notebook is enough. The bill of sale, the gift note, the estate letter, drop them in a folder. You will almost certainly never need it. But if anyone ever questions a deposit from 3 years ago, that folder is your complete answer. Move 5. For very large sums, ask about a transfer or a bank check instead of cash. Moving $50,000 in physical cash sets off every alarm, and it is genuinely risky to carry. A bank-to-bank transfer or a bank check moves through a cleaner channel with far fewer false alarms, and most car dealers and builders actually prefer it. Let me close with the most important point in this whole video. The $10,000 rule is not getting simpler, it is not getting more senior friendly, and it is certainly not being adjusted for inflation. It is getting broader and easier for the system to enforce with every passing year. The retiree who gets caught off guard is the one who did nothing to prepare, who did not give the bank a heads up, did not name a trusted contact, did not keep records, and then panicked and broke up a deposit at exactly the wrong moment. The retiree who does those few simple things moves their own money freely, the way they always have. You are not powerless here. The rules have changed, and almost. Nobody is telling ordinary Australians about it, but you now have the information and you have the moves. If this was helpful, give it a like. That is the single thing that tells the algorithm to show it to more retirees who need to hear it. And if you have got a parent, a sibling, or a neighbor over 60 with real money moving through their account, send this to them directly. The rules have changed, and you can be the person who tells them. I will see you in the next one.